Hello, everybody, and welcome. We're going to go ahead and take a look at another question today from earnings per share. This is going to be allocation of bond proceeds when we know the value of the bonds, but not the warrants. But in any event, my disclaimer on copyright notice is that the information and opinions in this presentation are those of myself and not my employers or affiliated organizations, including but not limited to Irvine Valley College and the South Orange County Community College District. Presentations for educational purposes only does not constitute any legal or accounting advice whatsoever. The presentation is copyright 2008 to 2026 by Bennett Tchaikovsky. All rights are reserved. Any distribution is strictly prohibited. Throughout the presentation, I will make reference to publicly available information as the copyright of other parties. I do not claim any right whatsoever to those third parties. Okay, well, let's take a look here. So we've got ZZix Inc. Corporation. I'll make that a little bit cleaner. Issued 3,500 of its $1,000 bonds at 105. Each bond was issued with two. Each bond was issued with two detachable stock warrants. Shortly after the issuance, the bonds were selling at 96, but the fair value of the warrants cannot be determined. Prepare the journal entry to record the issuance of the bond and the warrants. Assume the same facts as Part A, except the warrants had a fair value of $32 each. Prepare the journal entry to record the issuance of the bond and the warrants. Okay. So when we look at this over here, remember when we are issuing bonds, right, the journal entry, right, I'm always going to be going through and making is I'm going to be debiting cash. I'm going to be crediting bonds payable for the face value of the bonds. So I issued 3,500 bonds. Each had a $1,000 face value per bond, basically resulting in total, like a face value of the bonds at 3.5 million. Okay, now the bonds were issued at 105. So the total cash proceeds is going to be 3,675,000. Now, each bond was basically issued with two detachable stock warrants. Okay, so shortly after issuance, the bonds were selling at 96, but the fair value of the warrants cannot be determined. Okay, so this is essentially basically, so we've got total stock warrants. And now when it comes to this, essentially if the bonds were basically selling at 96, the way I'm going to want to go through and do this is to say, well, the face value of the bonds over here was basically 3.5 million. If they're selling at 96, that basically means that the true value of the bond with the discount is going to be 3,360,000. So the amount of the discount on the bonds payable is going to be 140,000 because, like, if I'm able to go through and readily determine that value, that's what I'm going to go through and put. Now, for the difference, for the additional paid-in capital stock warrants, what this is going to basically be the difference of is these two parts here. So this is going to have a value here of 315,000. When I go ahead and put that value in, basically my total debits equal my total credits. Okay, now let's go ahead and take a look at this next scenario. Assume the same facts as Part A, except that the warrants had a fair value of $32 each. Okay, so again, same thing. I'm debiting cash. That's not changing. I'm going to be crediting bonds payable. That's also not changing. However, my additional paid-in capital stock warrants is going to be different, right? So this is going to be, now that I have a value, so I've got 7,000 warrants at a price of 32 per warrant. For value of 32 per warrant. So here, my additional paid-in capital stock warrants is going to be 224,000. So now when I look at this here, I've got 3,724,000. So the amount of my discount on bonds payable is now going to be 49,000. So again, what you want to do with this is you want to first go through and assign where the value is going to be that you know of, and then the other one essentially will be like a default. Now, if you knew both, what I would probably end up doing is doing some sort of like a weighted average computation, but there you go. In any event, I want to thank you for joining me here today. I look forward to seeing you on the next video. Please remember to like and subscribe. If you have any questions or comments, please feel free to leave them below. If you have a question for me, please email me at ivc30tocpa@gmail.com. I look forward to seeing you on future videos. Have a great day.